6 secrets your bank doesn't want you to know. Bank secrets. Considering how heavily you rely on banks to safeguard your money, the relationship between you and your financial institution should feel like a close bond between old friends or trusted family members. After all, when conducting business with banks, you're putting faith in their ability to protect your assets. However, a point that has easily forgotten is that a bank is still a business, a reality they can't necessarily be faulted for. With this in mind, the duty falls in you, the customer, to uncover what banks don't want you to know. Many of these banking secrets are, in fact, no secrets at all, but that doesn't mean banks are exactly posting flyers in bank branches about certain facts they'd prefer customers didn't know. Find out how you can save money in your dealings with banks and protect yourself from ending up with the short end of the stick. Here's what banks don't want you to know. 1. Banks can take money from your account without asking. A right of set-off is one of the biggest banking secrets on the list that can pummel your finances to the ground. It often occurs when you have a deposit account and a loan at the same bank. So referred to as a banker's lien, a right of set-off grants the bank the right to access funds in your deposit account automatically, and without notice if you default in your loan. It might seem ridiculous that banks have the power of set-off, but it makes sense. When you deposit money in the bank, you are essentially lending money to your bank, with the promise they'll pay you back when you ask for it. See how do banks make money? For more on that, upon taking on a loan, whether an auto loan, personal loan or mortgage loan, you've established a mutual debtor-creditor relationship. Why should the bank pay you back your money, for example your deposited funds, if you can't make good on your promise to repay them? Your loan's terms and conditions likely identify this stipulation in the fine print. The best thing to do to avoid a right of set-off is to make timely payments toward the loan. Avoiding default is the only 100% guarantee that you won't lose money via set-off. If you're still concerned about your money, transfer your funds to a third-party bank. Set-offs only apply to deposit accounts within the same institution that funds your loan. In transferring your money, the bank cannot automatically withdraw your money, and instead have to seek legal action to claim your funds. 2. You can negotiate credit card rates. Credit card rates vary greatly between creditors. Some offer introductory rates as low as 0% APR while others soar past 20%. Plus, many credit card companies offer alluring incentives to win your business, like rewards programs, frequent flyer miles or cashback. Let's say you're faced with 2 competing credit card offers, one with a low interest rate of 10%, and one that offers rewards points with a slightly higher interest rate. Call the card company with the rewards program. When speaking to the representative, make sure your tone is indifferent. Explain that you're on the fence about applying for their credit card, because you received a better offer from their competitor, at a drastically lower interest rate. The service representative will likely tout the rewards program, but stay firm, yet courteous, in focusing on lowering the credit card rate. I played out a similar scenario with my own credit card company. After only 5 minutes of conversation, the initial 19.99% APR offer I received in the mail dropped to 12.99% APR. The call took all of 7 minutes. I was on hold for about 2 minutes, but the savings were well worth it. 3. Bank fees are also negotiable. The 2020 World Retail Banking Report Survey found that 62% of U.S. consumers do not plan on leaving their bank anytime soon, but that doesn't mean banks can get away with just anything. 50% of respondents surveyed said that bank fees would prompt them to switch to another bank, the second highest trigger cited in the report. It's for this reason that bank fees, even if you are in the wrong, are just as negotiable as credit card rates. Did you miscalculate how much money you had in your checking account and write out a bounced check? Call your bank immediately to contest the charge. By contest, I don't mean deny it, rather. Plea your case to have a bounced check or overdraft fee removed by leveraging your loyalty to the bank. Note your years of devoted business with the bank. Itemize all your accounts, example, checking and savings account, car loans, mortgage loan, etc. you've kept with the institution, and highlight your good record with the bank. Assuming you haven't defaulted and the fee you're asking to remove as a first-time offense. The most important part is not to let up. Stay polite and don't take no for an answer. Banks don't want you to know that most institutions will gladly waive a $25 overdraft fee if it means keeping your business. 4. Debit cards carry higher liability. When standing at the checkout counter, you'll often hear the cashier ask, credit or debit, when you have your Visa or MasterCard debit card in hand. While the debit option gives you the convenience to see the transaction process almost immediately, you're putting yourself at greater risk. Credit cards and debit cards have differing liabilities associated with them. By choosing the credit option and signing for your purchase, you are protecting yourself from fraudulent activity under Visa or MasterCard's liability terms. With credit card fraud, your maximum liability under federal law is $50, according to the Federal Trade Commission. And in most circumstances, like with a Visa transaction, you'll have zero liability on unauthorized charges. Debit cards are another story, however. When you encounter fraudulent activity with debit cards, timing is essential in determining the maximum out-of-pocket liability you're responsible for covering. Your ultimate liability depends on your unique situation, but if you've lost your debit card, you have to report it lost within 2 business days to limit your liability to $50. But reporting a lost or stolen debit card, or contesting fraudulent charges beyond 2 days, may hold you liable for a maximum of $500. Whenever possible, opt for credit card purchases to limit the financial blow in the event of fraud. 5. Banks make more money the more you swipe your card. Did you know every time you swipe your credit or debit card, the bank is making money by charging the merchant some fees? There are promotional credit cards that will require you to spend a certain amount of money within a particular time frame, so that you are eligible for a financial reward. You do not want to get a card like this. Why deal with it? Just stick with a debit card and watch the impulse buying. Another aspect of using your credit card is that banks know for sure if the amount is around $1,000 or more, you may not be able to pay off that purchase at that time. The result is that you will end up accruing some interest, which in turn is a way for the bank to make more money. 6. Bank tellers are not financial experts. Bank tellers are your first point of contact with your bank, but what banks don't want you to know is that many of them don't have a financial background of any kind. You'd expect that the person managing your transactions is finely attuned to the ins and outs of handling financial accounts, but that's usually not the case. While some bank tellers may indeed have some financial knowledge, most are straight out of high school or are still college students. Kelly Gilpin worked as a bank teller for United Bank and Trust in Michigan after high school. Did I have a financial background? Hell no. I didn't even like math in school. Upon taking on the position, Gilpin shares that the requirements were very minimal, essentially those who were simply able to learn as they go, and acknowledge customers at the window were brought onto the team. Did I meet those requirements? Yes, said Gilpin, but are those the right requirements for being the first line of contact for a person's financial affairs? Questions and concerns? Of course not. Fortunately for Gilpin, she has since continued to work in the financial services industry for over 20 years. According to the 2020 World Retail Banking Report Survey, the number one cause for switching to a new bank, at 53% of responses, is poor customer service. If you're not getting the response or answers you're looking for from a bank teller, move up the ranks and speak to a supervisor or branch manager. Likely, an unsatisfactory service experience can get you additional benefits like added rewards points onto a bank credit card or a reimbursement on a statement. And finally, never becomes too busy or too lazy to check your account. A major fact is that some hidden charges may be deducted from your account overnight, and it's always good to know so your finances and budget can be kept in order, and the necessary adjustments can be made.